Good morning. Welcome to Trading Hour. I am Reema Tendulkar with Mia Pavitra Parekh and Sumaira Abdi. Good morning, girls. Good to see you all in white, pretty. For the markets, a quick check. In terms of numbers, we opened below that 17,500 mark on the Nifty. From that level, we've managed a recovery to now 17,650. We're still down 0.6% on the benchmark indices, but we're off from the worst levels of the morning. Asian markets continue to struggle. In fact, we are resilient compared to the rest of the Asian pack. Hang Seng, Nikkei, Korean markets, Taiwanese markets are all down between 1.5% to 2% this morning. It's the auto index where we're seeing big gains. The Nifty auto index is at a fresh 52-week high. Bajaj Finserv has been a big mover. It's rallied today, and this week itself, in 3 trading sessions, Bajaj Finserv has gained close to about 7.5%. And on the losing side, it's IT which continues to struggle. The Nifty IT, a representative of the tech stocks listed over here. The Nifty IT index is down 1.7%, with TCS and Infosys showing you cuts in excess of 2%. Hi.
Hi, good morning. So you were talking about the auto pack, and we were talking to Bajaj Auto this morning as well, and they're sounding so optimistic on demand. In fact, they're saying that a lot of the supply side issues as well, the chip shortage has eased. They're now not dependent on a single source, and that they do expect their market share to pick up as well. So that's a big positive that came through from Bajaj Auto. In fact, a lot of these stocks are sitting at fresh 52-week highs. So whether it's a Bajaj, Maruti, TVS, Leyland, all of them doing well in trade. On the downside, you have some of the consumption names which are seeing some cuts right now. So that will be up for you. Tata Consumers in the green, but the rest of them seeing some cuts right now. So the likes of HUL, Nestle seeing cuts, and the Adani group of stocks also in under some pressure right now in an otherwise okay looking market. So some of those names will be up for you, the likes of Adani Transmission, Total Gas, and then of course there's a whole slew of news flow coming in on stocks like SpiceJet, Biocon. So do keep those on your radar as well. But Sumaira, considering that we've got a 160-point recovery from the lows, I think we should take this. We did have a 350-point cut on the SGX, so this looks quite good.
Yeah, we'll take it with both hands, I guess. So let's get to our top story right away. Zee Entertainment is on our radar today, and that's on the back of some news that has come in. The company has signed a licensing deal with Disney Star for the ICC men's cricket events. Meanwhile, the Zee Entertainment stock is under some pressure amid CCI concerns around this deal over the proposed merger with Sony. My colleague Mangalam is here to fill us in on all the relevant details. Mangalam, morning.
Good morning. So 2 things that are affecting the Zee stock today. The first one is ICC and the second one is CCI. And as we speak, CCI seems to be, weighing higher on the ICC development. Let's talk about both of them one by one. ICC, on late Tuesday evening, we got the update that the company signed a licensing deal with Star as well as Disney to go ahead and air on its linear TV channels all the ICC men's tournaments between 2024 and 2027, which includes the 2027 50-over World Cup. We have the Champions Trophy and a couple of T20 World Cups as well. So that does well for Zee for a couple of reasons. One, while they haven't disclosed the financial details on this deal, analysts believe that payments for such syndicates have to be staggered, so they won't impact their bottom line as much. But importantly, what it does is it fixes a missing piece in the overall bouquet of Zee and gives them a sports mantle to show for in terms of 2024 to 2027 as far as cricket is concerned. So that should have been a positive. But what's weighing down on the stock in today's trading session is the news that came in that the CCI has asked for a couple of more clarification points with regards to the merger between Sony as well as Zee, and this is after their initial findings. So this was a Reuters report to which Zee has gone ahead and responded, saying that the article claims data from FY21, before FY21, which suggested that the combined market share of Zee and Sony was over 40%. But now the latest BARC data reveals that the combined market share is about 36% itself, and the concerns that they have are only basis initial findings, and this conversation is a continuous process. So as a result of which, they will engage with the CCI, and they don't believe, including the analysts, they don't believe this to be a big problem as far as the merger, the future merger between Zee and Sony is concerned. But until there is clarity that emerges, this continues to be a bit of an overhang on the stock.
Thank you very much, Mangalam, for laying the turf for us. To discuss this in greater detail, we're now joined by Abneesh Roy, Executive Director, Institutional Equities at Edelweiss Securities, on the show now. Abneesh, morning. It's a pleasure having you here with us. Before we get chatting about the Zee-Disney deal, wanted to get your thoughts in on the CCI overhang. Do you think it'll be a big concern? Will it, bring about big hurdles in the Zee-Sony deal? Explain it to us.
Sure, thanks. Yes, one positive news, one negative news. Clearly, positive news will be more on a 18 months to 4 years perspective, while the negative news is more near term. So yes, on the CCI, there are three key things. One is, as of now, it doesn't seem to be a big overhang. It is slight overhang. Investors are currently grappling on 2-3 issues. Where how much does this delay the process? And is there any channel reduction which the merged entity will have to do? If we see the numbers of market share, which Mangalam also highlighted, currently, if you see, there is a competition from Amazon, Netflix for the TV channels. So when you just see a TV market share, you're ignoring the OTT market share also, because customer obviously now has moved on. In the last 2 years, customer has moved on. There's huge disruption. Coming back to TV channel market share, if you see the numbers, clearly the merged entity has lost market share. And this is a dynamic world, right? Market shares are going to be dynamic. But if you see in each of the 4 genres which CCI seems to have mentioned, the market share of non-Zee, non-Sony is at least 63 to 73%. Apart from this, NTO2 still is a big overhang on subscription. So my sense is bargaining power doesn't really increase too much. But yes, investors will be concerned on time and whether the number of channels, any change would need to be there. But yes, H2, we do expect the advertising revenue to come back, which is a positive for Zee and all TV channels. One last point is essentially on the time. If you see, NCLT approval will take further 7 months. So CCI is happening in parallel. And my sense is 7 months is a long time for CCI and Zee-Sony to sit together and see how the data is and to address the questions which CCI has. Yes.
All right, got it. So it's not necessarily, of course, that, there will be any delay on account of just the CCI investigations and the concerns. But Avnish, thanks for joining us. This is Pavitra. You've mentioned in your note that the CCI may propose a slight change to some genres in which the market share is high. How do you expect this will play out, in case they do go ahead and propose this?
Yeah, so if you see, CCI seems to have pointed out 4 genres, Hindi GEC, Hindi films, and 2 regional, Bengali and Marathi. If I see what had happened in PVR's acquisition in multiplex DLF cinemas, they had told PVR to let go some of the screens in some of the micro markets where there was a high market share. So here also, there could be one option for CCI to see that in these few genres, how is the market share? Should I look at only TV market share? Because customer now obviously has moved on to OTT in a very big way, and there is Netflix, Amazon Prime, and whatnot. So I would say, yes, the one possibility could be, one scenario could be that some of these genres, the CCI may propose something, but this is completely in the realm of CCI, so very difficult to second guess. But that's one possibility which I would not completely rule out.
Avnish, just one question on this issue before we move on. Do you not think Zee should have disclosed it to the shareholders? Because the competition watchdog's letter, CCI's letter, came out on 3rd of August. And now, it's come to light only on 31st of August. If CCI had raised some concerns, would it not have been better corporate governance for Zee to disclose it to the shareholders before this?
So if you see, this is a discussion between CCI and Zee-Sony. And if you see this kind of a merger between 2 large players, to expect that CCI will not ask anything, I think that doesn't work that way. So this is part of the procedure, I would say. And obviously, there is sensitivity in terms of data, how you interact. There is a regulator, there is 2 merged entities, there's 1 entity which is unlisted. So I would say that this is quite routine that CCI will ask questions on the past data. But the data which CCI is referring is to FY21. So the world has changed in terms of, say, OTT because of the COVID also. And clearly Zee has lost market share. So I would say that, yes, in that context, I don't think there is any concern because you don't want to give a data which is very premature, right? As I said, in CCI, these kind of queries will happen in these kind of large mergers.
All right, let's now move on and talk about the good news which came through, which is the ICC media rights that they have won. So take us through how you look at this and how much of an upside do you see on account of this news that came through? Of course, they now have a big chunk of the cricket rights.
Yes, sir. So if the CCI thing wouldn't have come, hopefully Zee should have been in better stock performance today. But yes, coming back to this deal, it was very surprising, right? 2 rivals who are fiercely competing for the last 20 years. trying to work with each other in a small way. Why has Star done this? They are trying to reduce their concentration risk in one country, India, and in that market, they are trying to reduce concentration risk on TV because IPL rights are with Star, and similarly, digital rights of IPL are with Viacom. So, Star is trying to reduce its concentration risk, especially given the way macro is, especially given the way overall disruption in terms of consumption habits are changing. I think it makes a lot of sense. For Z, clearly, it will address the missing gap in their portfolio. My sense is when you deal with BCCI, then the rights are very expensive. We have seen that in IPL, for example. But here, Star is entering into a sub-licensing with Z. So I think for Z, this will be a much more better deal. Strategically, huge sense. Plus staggered payment, as Mangalam highlighted, over a 4 years. So when the event happens, then you have to pay. And because these are World Cup kind of events, I think in terms of viewership, this will definitely help Z when these events happen. So net-net, yes, it's good. Last point is Star sub-licensing TV rights. Does it mean that they are negative on TV? No, not really, because they bid for the IPL TV rights, right? So it is just a case of reducing the concentration risk in the portfolio.
Got it. And how would you map the impact on the P&L, both in terms of the benefits, revenues, advertisements, etc., and the possible costs over the next 4 years?
See, very difficult to say because we have just one number, $3 billion Star bid for these ICC, but that includes the digital TV and the women's properties also. So we don't have a breakup, so that's a challenge. But if I see, definitely this starts in FY24. So this is very early to really start building in numbers also. Also, we need to get a formal approval from ICCI, which seems to be more of in principle. But I would say that this will not be a big negative impact because that's a concern everyone has on TV rights when BCCI is involved. But this is not between BCCI and Z. This is between Star and Z, and Star is trying to reduce. So I would say that, yes, from a revenue and cost, difficult to give a number, but it is definitely positive for Z from a strategic. But these are 4 or 5 properties over a 4-year time frame. So I would say the impact is more of a strategic rather than any big impact on the EBITDA level. Of course, the margins will be lower. So we will see some compression on margins for Z when these things happen. But on a full year number, and hopefully if it's a merged entity, then the impact will be low.
All right, Avnish, then finally call on the stock.
So we have a buy on Z. Of course, these issues are happening. There's a huge delay already in terms of exchange approval. But in terms of triggers, what we see is in H2, because commodity costs have corrected, FMCG companies, auto companies will come back in terms of advertising, a lot of the other discretionary. Also, NTO2, there will be more clarity in the second half. So these are the 2 triggers. The valuation is quite comfortable. But my sense is near-term overhang will remain till the CCI issue gets addressed, the NCLT approval comes. There is a near-term, definitely question mark, which we still are grappling with.
All right, Avnish, got it. Thank you very much for joining us. So like you said, there's perhaps a near-term hurdle with the CCI raising some concerns. But of course, the ICC rights that we were talking about is quite a positive for the company. With that, we're going to get into a short break on the show. But as we do that, here's a quick reminder for our viewers. It is that time of the year again. Money Control Pro's Financial Freedom offer is back and with added benefits. So you can get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website.
मैडम जी वो सारे पैसे लेके भाग गए और मेरा वड़ा पाव भी ले गए।
दिखाते हैं इनको।
मोटे वड़ा पाव। डीलर निकाल दे इसके बाद।
पंक्चर के बाद भी इससे हवा नहीं निकलेगी क्योंकि ये है जेके पंक्चर गार्ड टायर जो कील लगने के बाद भी होता है हील। जेके पंक्चर गार्ड टायर, अब हवा नहीं निकलेगी।
मेरे लिए कुछ नहीं बचाया।
बचाया ना, सिस्का BLDC फैंस ने 60% पावर बचाया, पैसे बचाए, प्लैनेट बचाया। BLDC मोटर, मोर सेविंग्स, मोर पावरफुल, मोर इको फ्रेंडली।
बचाओ।
सिस्का फैंस, लाइट ईयर्स अहेड।
सिस्का।
Hi, welcome back. You're watching Trading Hour. Let's invite Himanshu Gupta of Globe Capital, who now joins in for a quick tech check on the market. Hi, Himanshu. Morning. Thanks very much for joining in. Let's start off with what one would do on the index now, and what are the stocks you're looking at?
Hi, Sumaira. Good morning to you. Well, I think the markets are clearly ignoring the weaker global cues. And as expected, right from the word go, there is a whole lot of buying across the markets, across the sectors, led by realty, infra, and banking, alongside automobiles. I think if you talk about the Nifty levels, we have the candle which has been forming so far. It's a classical inside day bar, which is typically very well within the previous days inside very big candlestick. And I think Nifty is likely to remain in that consolidation or a range-bound trade expiry given the weekly expiry today. So I think the 17,600, 17,700 is the broader range that I am expecting from Nifty today. So not much in terms of a long trade, but yes, if you get a dip of nearly 50 points close to 17,600, it's there you can initiate long position with a stop loss below 540, targets of 17,700, 750. But on the other side, Nifty Bank is the index that's actually leading from the front and showing a lot of strength. And the data is also turning out to be very positive as we speak. So I think 39,500 are the odd levels where one can initiate long positions. 39,700 is the first level. And above that, I think a huge short covering of another 200 to 300 points can be seen in this index. And we can see the index rallying towards 39,900, 40,000 today itself. And keep a stop loss below 39,300 for the long positions in this index. Now, talking about the individual stock ideas, I'm going with a couple of buy recommendations. The first one is a cash stock called Philips Carbon Black, PCBL. I think the stock has given a phenomenal breakout in today's session, and I think the stock is actually looking to head higher, much higher from the current levels. So this can be initiated as a long trade for a target price of 165, 170, keeping a stop loss below 134. The next one is a buy on Kotak Mahindra Bank. I think this is one bank which is basically on the verge of giving a breakout. And I think the chart structure is suggesting that we can see some sharp up move in this bank in the short term. So one can initiate long positions for the target price of 1960 and 2000, with the stop loss below 1900. And finally, a buy call on Tata Consumer, which has given a very strong breakout on the daily charts today. So I think one can initiate long positions here for the target price of 850 and 860, and a stop loss below 820 can be placed here.
Himanshu, thank you very much for joining in. Let's move on and talk about important corporate updates. SpiceJet is in focus after reporting a big loss in Q4 as well as in Q1. The company reported its last 2 quarters numbers with a lot of delay, and the losses are mounting. Sonia is here with details on this. Sonia?
Well, SpiceJet continues to report steep losses both for Q4 as well as Q1. Now, the company had delayed its financial reports both for the March quarter as well as the June quarter, and finally they've come out with a statement, and it's not looking good. The losses have gone up substantially because of the rise in ATF prices, and for Q4 there's a net loss of 485 crores compared to a loss of 257 crores same time last year. Not just that, for the full year of FY22 as well, it's a staggering loss of 1,721 crores that SpiceJet has reported compared to a loss of less than 1,000 crores in FY21. And the latest numbers, Q1 of FY23, also indicates a net loss of almost 784 crores. Now, where is SpiceJet going wrong? Despite a recovery that we've seen in passenger demand, the big costs that the company like SpiceJet has to bear is higher ATF prices. For example, in quarter one itself, ATF prices have more than doubled on a year-on-year basis and gone up 40% compared to last quarter. The management, Ajay Singh, did mention that this is the most severe operating environment in the recent past, and apart from higher ATF prices, it's also the depreciating rupee that is a major concern for them. The stock is under pressure, down 7% today.
Thank you very much for that. Let's quickly talk about Biocon as well, where the US FDA has issued observations for 2 of its facilities, 11 observations each for 2 sites in Bengaluru and 6 observations for its site in Malaysia. These inspections were conducted by the US FDA from the 11th to the 30th of August. Well, we had a chat with the management earlier today to understand the severity of these observations, whether there were any data integrity issues, and how it will impact the company's pipeline going ahead. Here's what the management had to tell us. They're saying No systemic non-compliance cited post the US FDA inspection. No data integrity breaches observed by the US FDA. They said the inspection was conducted for 3 different products, and they plan to respond to the US FDA with respect to what they had to tell them within the next 15 days, and they don't see any changes in the company's pipeline. In fact, let's hear out what Shrihas Tambe, the Biocon Biologics Deputy CEO, had to tell us.
There are no systemic non-compliances that have been cited in any of these observations that the agency has put out. And there are no data integrity breaches that you specifically talked about. Since we didn't have inspections since 2009, we have been waiting for the agency to get over to our facilities. This inspection was at 7 different manufacturing facilities at 2 different locations, Bangalore and Malaysia, for 3 new products. Post the inspection, we have no reason to believe that there is any change to that timeline. The inspectors didn't indicate any change to that approval timeline. We would be looking to consummate that and close the transaction by the end of the first half of this fiscal, first half of H1, as we said, and we are on track for that. We look to close that end of September.
All right, on that note, we're going to take a very quick break, but we're going to be right back. And on the other side, we'll bring you analysis on the Q1 GDP data and the impact. Stay tuned.
Welcome back. This morning, we woke up to a double whammy of negative news. One, the continuous decline in U.S. markets with the key indices, Wall Street declining for 4 consecutive days. And then we had the weak macro print. The Q1 GDP numbers for India missed street expectations, coming in at 13.1%. That said, after a weak start, markets have managed to recover about 150 points from the day's low. And as we speak, we're sitting with a modest cut of about 0.5%, and the mid-cap index is in the green. But let's focus on that Q1 GDP print, which at 13.5% is lower than economists' expectations. Lata is here to give us the fine print. Lata?
Well, first the numbers, GDP first quarter number came in at 13.5%. The CNBC-TV18 poll, or the street estimate, was between 15 and 15.5%. And the Reserve Bank's projection was 16.2, so it's lower than all that. Now, if you adjust this number to the Reserve Bank's projections, then the Reserve Bank's full year forecast falls from 7.2% arithmetically to 6.7%. Now, let me just explain why this 13.5 is a bad number. At the outset, 13.5 GDP growth over 20% last year looks good. I'll tell you why it's weak. If you take the actual Q1 GDP, it is 36.85 lakh crore. And this is only 3.8% higher than 3 years ago GDP of FY20. That's a poor record of growth. The weak elements are first construction. Construction GDP has come in at 2.62 lakh crore. That's the latest quarter, which is a good 16.8% higher than last year, but it is only 1% higher than the 3-year-ago level. That is the decline in consumption. Likewise, another huge category, trade, hotels, transport and communication. It's a large segment. Now, there the GDP is 5.59 lakh crore in the latest quarter. A good 26% higher than last year, but 15% lower than what it was 3 years ago. And both these sectors are, large employers. They comprise, the small Udupi hotels, traders, medium and small enterprises, unorganized labor in construction. Now, that is the weak part. What are the strong points of the GDP? Private consumption. Private final consumption expenditure has come in at 22 lakh crore, which is 26% higher than last year. And over the 3-year level, it's a decent 10% higher, which is over a 3% compounded growth. Likewise, capital formation. Capital formation has come in at 12.8 lakh crore, which is 20% higher than last year, but a decent 6.7% higher than the 3-year-ago level. Not spectacular, but at least it's not bad. Now, following the weaker than expected Q1 headline number, many brokerages have cut their full year estimates, mostly to around 7 or below 7. Citi is the most important. They have cut their real GDP number to 6.7. They were standing at 8, so that's a huge cut. JP Morgan has merely said that they are standing at around 7%, so it's not above 7. Morgan Stanley has cut it from 7.6, where they were, to 7.2, so a 40 basis point cut. And CLSA was sitting at 6.7. They have upped it to 6.8%. But the short point is there is a very good possibility India will not get to 7% growth this year. It may be a 6 handle, maybe 6.8, 6.9.
Okay, thank you very much, Lata, for that. Get into a short break. Up next, we'll discuss market fundamentals. Unmesh Sharma, the head of institutional equities at HDFC Securities, joins us next.
अरे भाभी जी बड़े दिन बाद
मुझे बेस्ट डायमंड ज्वेलरी दिखाओ।
ये एक्सचेंज करा लूं?
बेटा एक्सचेंज में ज्यादा
नहीं, सिर्फ 5% कटेगा।
वाह!
पेश है 95% एक्सचेंज वैल्यू और 90% बाय बैक भी। किसना डायमंड ज्वेलरी?
नई कार। तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको
नहीं तो कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं मूर्ति, कोई फायदा नहीं, मैं बोल रहा हूं मूर्ति, कोई जरूरत नहीं।
नई कार खरीदने से पहले एको इंश्योरेंस कंपनी चेक करे और 50,000 तक बचाए।
Hey guys, welcome back. You're still watching Trading Hour. So it's now around 100-point cut that we are seeing on the Nifty compared to what's going on in the rest of Asia. And of course, the kind of handover that we got from the US. So this is looking quite all right. And the Nifty Bank, by the way, as we speak, has also moved into the green right now. So take a look at SBI, Indocent. These are some of the stocks which are doing better from the Nifty Bank pack. Even something like a Kotak Bank. Another space which is looking really good today is the real estate sector. So something like a DLF, Godrej Properties, Sobha, all of these stocks holding up quite well. Of course, Bajaj Finserv is the top gainer right now, and that also seen a massive recovery from the lows. For now, that stock is up almost 4%, 3.7% higher on Bajaj Finserv. And if you take a look at a few of these other names, so something, of course, like a Hero Motor Maruti, they've moved even higher in the past few minutes that we have been talking, and a lot of them sitting at fresh 52-week high. So do keep your eye out on that entire pack. Of course, it is in focus also because the auto sales figures are trickling in through the day. But let's get a conversation going now. Unmesh Sharma, head of institutional equities at HDFC Securities, joins us now to discuss the way forward for the market. Unmesh, good morning. Thanks a lot for joining us. This is Pavitra. So, my first question to you is on how do you see this entire setup where globally you're seeing one thing play out, but India seems to be a little bit decoupled from that. How do you look at it, and how do you think the Indian market is headed from here?
Yeah, no, actually the move after the first night, after Jackson Hole has caught us by surprise, no doubt about that. Having said that, we believe this would be a temporary phenomenon. The tone has turned distinctively hawkish. I think there is no doubt about that. This is also something that we held. If you remember, about a month ago on this channel, we had given our view that after the Fed conference, which had happened after the FOMC meet, post that we were not convinced that the dovishness would continue. So that has happened. Now, as far as the move in the markets is concerned, I think that at least the first day's move can be explained by the fact that there was there was the rebalance happening. But at this point in time, we believe that the market, even if you look at the chart today, it dipped down, which was a little bit along expectations. We've had a decent GDP print, but honestly, we continue to hold our stance that in this long and arduous fight against inflation, there will continuously be very high volatility, and one should lighten their portfolios and move away from high risk, long duration assets as far as possible.
Unmesh, morning. Autos is in top gear right now. The Nifty Auto Index has hit a fresh 52-week high. The sales numbers that are trickling in are also looking good. But considering the kind of run-up that we've seen in auto names, do you think the risk-reward is still favorable? And if yes, what would you be betting on and why?
No, so I'm unable to give single stock recommendations because I don't sit within research. But having said that, in our model portfolio, yes, we have added weight consistently. Our analyst who has initiated coverage recently also has a positive view on the autos. We believe the run-up, was justified in that sense because that's been the view that we have been holding. Within our model portfolio, you will notice that we have a fairly high degree of positivity on the domestic economy-facing sectors. Autos within that remains one of them. So while yes, the run-up has been breathtaking. At the same point in time, we believe we continue to remain constructive on this space, especially on the domestic ones.
Okay, hi Unmesh, morning. One of your preferred sectors is also insurance, but this is a place where now a lot of investors have been chasing returns. What is the upside, say, over the next few years?
Okay, so look, insurance, we like both top-down as well as bottom-up. This is, again, going back to the macro environment, which we believe remains continuously cloudy. Within that, one of the themes in which we like to play this is to look at themes which are not affected by the near-term issues as far as the macro outlook is concerned. So if you look at whatever discussion we are having on whether it's a recession, whether it's the quantitative tightening and all of these matters, finally, what will happen is that investors will want to look through that and go to themes which will survive the whole, structural themes which will survive that. Now, within that, financial inclusion remains something that we like. Insurance is the top of that, along with capital markets. But at this point in time, insurance is something we like. From bottom-up perspective, all the underlyings are in place. We continue to be very constructive on the insurance space.
Okay, constructive on the insurance stocks. Another one that you have as your preferred sectors is the IT pack. And I have to ask you about this one, after the kind of beating some of these stocks have taken. Of course, it is a global phenomenon that we have seen play out. But how do you look at these now? And do you think that we're not going to see too much more of a fall from here?
No, so look, our analysts have come out with an excellent thematic report on this one. What they have done in the past is the last few reports, they looked at what is happening on the cost side, then what is happening on the demand side. Now, there have been issues such as attrition really and the wage increase which has come through, but we believe that a lot of that is in the price. What we are looking at now is that structurally the demand, the most recent thematic that we wrote last month about the structural drivers of demand in that, we are quite constructive on those. What we believe is that more diversified companies, and especially the ones which are looking at now the movement into things like the cloud and digital are the ones which will survive within that. In that we are selective. Some of the mid caps we think that after having run up and now at a significant premium to the large cap pack are not where we are not that constructive. But at the same point in time, we believe that there is also some amount of positivity which could come through because of the fact that there is no major reason to expect the currency to appreciate. And on top of that, the demand drivers continue to remain intact. So we are structurally very positive on this space.
This Q1 GDP print, that's come as a bit of a miss. Does it change your assessment of what the quantum of RBI rate hikes could be? Does it change and impact what you were expecting out of equities, maybe perhaps in terms of the EPS growth, corporate profitability could be lower than what we had earlier anticipated? Because economists are bringing down the GDP forecast for the year.
Yeah, so look, there are two views on this. One, from the economic perspective, it was slightly lower. Now, the headline number obviously looks strong because of base effect. But at the same point in time, the number even adjusted for that base effect, if you assume that last year was a normalized year, would also be slightly lower than what we thought, because we really were looking at a GDP print of 7+ for this fiscal year. Now, in that context, will the numbers come down? Marginally, yes. Is the number, however, that big a miss that it should be seen in the context of whether it impacts corporate profitability? Two things. One is marginally, yes. Secondly, in any case, if you look at the way in which our model portfolio and EPS number for this year is constructed, we are a little bit lower than consensus anyway. So this becomes another reason for the consensus to kind of accelerate down to the point where we can see more muted earnings expectations. So this could accelerate the trend towards the catch-up on that front for the earnings downgrades for this year.
All right, Unmesh, we are going to leave it at that today. Thank you very much for joining us and taking us through your call on the market, as well as a lot of these individual sectors and stocks that you do like. But with that, we're going to get into a short break now. On the other side, we're going to talk about the auto space. We'll get you a roundup of the sales numbers that we've got so far for August. And then we're also going to talk with the management of Sansera Engineering. Hey guys, welcome back. You're still watching Trading Hour. Now let's talk about the auto space now. Like we've been telling you, all of the stocks are surging in trade. We've been getting sales figures for the month of August, and Bajaj Auto's August sales have come in above street estimates. So it came in at 4.01 lakh units. There's a big near 50% year-over-year jump in the domestic sales, but there has been a slip in the exports, and they're down around 28% year-over-year. So we spoke to Rakesh Sharma, who's the executive director at Bajaj Auto, on the company's sales in August. Listen in to what he had to say.
Decline in numbers which you're seeing in export sales is not really the outcome of Egypt. If you may recall, we had said that there are developments in Nigeria and a few other parts of Africa, but particularly Nigeria, where retails have slid downwards for two reasons. One is, of course, there is inflation and lower availability of dollars, but there is also an uncertainty due to certain pronouncements by the government of government of Nigeria restricting the movement of motorcycles. The Nigerian retails have shrunk by 25 to 30% for us. And what happens in that is that we like to take a prudent view because it's a long supply chain. And if these retails continue at this level, we don't want overexposure of our distribution partners in terms of stocks. So this month has almost been a nil month of exports to Nigeria, so that we take the hit and get the process of getting the stocks in balance. So it's really that one issue. And of course, the Egypt issue, which is a much smaller one when it comes from when you look at it from a number point of view. Engagement with the government is on. We are looking at alternate fuels. We're looking at alternate formats. It's a process because we have to create classifications. We have to get approvals and consultation with them. So that process is very much on. But in the meantime, there have been no exports of three-wheelers, and it was a substantive market from there.
That's Bajaj Auto for you. Staying with the auto space, Sansera Engineering is a stock which is on our radar. The company has won a 51 crore repeat order from a North American manufacturer of EV passenger cars. To discuss this order win, the pipeline, the business outlook at large, we're joined by B.R. Preetham, the Group CEO at Sansera Engineering, on the show now. Good morning, sir, and thanks so much for joining in. This is a repeat order for you because in the past, I think you won a 49.7 crore order from the same customer. Could you give us a sense of the company's current order book and what the pipeline is, and what does this set you up in terms of a full year growth? Any numbers that you can help us with, sir?
Yeah, good morning, and thank you for having me on the show. You're right, this is a repeat order from this customer, but this order is for the passenger vehicle segment specifically. And this is very much in line with Sansera's overall plan of expanding our EV presence, expanding into XEV and pure EV vehicles. So this is definitely a start point in that direction. We have been working on this space, and this is the beginning of the journey for us.
This is the first order that you've got for EV passenger vehicles?
This is for on a pure BEV segment. Yes, this would be for the first order for the pure BEV passenger vehicle. Yes, right.
Okay, and what is the order book, sir, now, and FY23 growth forecast, if any?
Yes, order book is very healthy. As we had said that in the earning call also, our order book at in the end of the Q1 stands at 14.9 million rupees. So there is quite a good number of RFQs which are getting converted, specifically in non-auto and two-wheeler EV segment domestically. We have been consistently receiving orders, so we are on a right track. And on the FY23 projections, we are quite positive that the strong domestic demand will lead us to at least a double-digit growth on the year-on-year basis.
Okay, so can you also tell us of this total order book, how much do you expect to execute in FY23? And you're saying double digit, but that doesn't tell me much. I mean, it was 35% last year. Even before that, you had around 27%. So how much can we expect this time?
No, see, there are a lot of factors that are still, recession in Europe, energy crisis in Europe. We have just come out of chip crisis. So there are still uncertainties, but our new business order wins have kept us going, though there is a slight slowdown in the export market. The domestic and the new business wins have been very, very strong for us. So we do expect to continue to outperform the market by at least 8 to 10%. So whatever is the average market growth that you would have, we will definitely be better than market by about 8 to 10%.
Mr. Preetham, morning. Any other EV OEM orders that you're exploring, or ones which could be on the anvil? Anything further expected in FY23?
Yeah, on the domestic front, even during the call that I mentioned that today, Sansera, we have almost been working with all the major now EV two-wheeler manufacturers. We are very happy to be associated with all these companies, be it startups or the thing. We recently also won awards, business awards from Ather, from Ultraviolet. We are now, working with a couple of more. So we are today probably covering the entire, two-wheeler EV segment in India. So our, order wins in this segment is quite good.
I missed the number that you told us. What's the current order book as of post this order?
No, this order book is part of the work in progress. So our order book, how we mention is, this is a peak annual revenue. So at maturity, this would be there. So that is how we actually declare our order book. So the order book numbers that I gave you is on a peak annual revenue, which is not yet started on mass production.
So what would the number be?
So it is very close to about 1,500 crores.
Okay, 1490 crore. I think that's what you told us.
Yes,
14.9
yes.
billion.
Yes,
okay, got it. The net debt on your books is 600 crores. Do you have plans to bring it down? If yes, by how much?
No, we are on a expansion spree. So there's a lot of work that is going on. We have commissioned 2 new plants. One is commissioned and one is getting commissioned. And there is a very strong order book. So while we are, our cash flow is good, we are generating we are also investing back into the business. So I don't expect too much of a change into debt. So there would be some small reduction, but it would not go up. So with even the expansion, we are able to fund it internally.
So when will these new plants start operating, and how much can it add to your capacity?
So this new plant, which is one plant, is already commissioned for the EV two-wheeler and hybrid engine component space. That is already started operational in the last quarter. And new aerospace and defense sector, where we are seeing a lot of traction. This is getting commissioned, or the plant completion would be in October. But there will be a validation process that will happen for next 4 to 6 months. So I expect the Q1 to start generating the revenues from this new facility. And this with its full works, which is completed, it could add about 200 crores to the top line.
Mr. Preetham, within autos, you are supplying to two-wheelers, passenger vehicles and commercial vehicles. Can you give us a sense of where there is the most traction?
Commercial vehicle, passenger vehicles, both the sectors are doing well. Two-wheelers are definitely on the recovery. So we are seeing traction on all, but passenger vehicle and the commercial vehicle, there is there is much more positivity compared to the two-wheelers, but two-wheelers is also on the path of recovery.
We'll leave it to that. Thank you very much, sir, for joining in. That's Sansera Engineering for you. Get into a short break. We'll come back with more on the markets.
इडली दहीवड़ा प्लेन उत्तपा मसाला उत्तपा ओनियन उत्तपा टमाटो उत्तपा सारा चीज डोसा मसाला डोसा पेपर सादा डोसा वेज कड़ी वेज कढ़ाई वेज कोला स्टीम राइस जीरा राइस फ्राइड राइस
भैया और कोई ऑप्शन?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर ऑन एमओ इन्वेस्टर एंड एमओ ट्रेडर ऐप। डाउनलोड नाउ। इन्वेस्टमेंट इन सिक्योरिटीज मार्केट इज सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
Hey, I am India's first electric SUV. The rest followed. Once charged, I go the distance. My quiet presence ensures your peace of mind. The 2022 Kona Electric from Hyundai. Go electric, go Hyundai.
नहीं मूर्ति, कोई फायदा नहीं अब। मूर्ति, कोई जरूरत नहीं भाई।
नई कार खरीदने से पहले एको इंश्योरेंस कंपनी चेक करे और 50,000 तक बचाए।
Welcome back. Markets are struggling, but right now, for the next few minutes, let's put the spotlight on China and the growth concerns emanating from China. Well, China released its headline Kaizen manufacturing PMI, and that has declined in the month of August to a level of 49.5, which compares with over 50 in the month of July. Well, China in the last couple of months has faced a trifecta of economic storms or concerns, which includes COVID-19 lockdowns, a deadly heat wave, as well as a property crisis. In August, it appears, going by the PMI data, the situation has only deteriorated. And analysts say, looking to September, while the heat wave is likely to subside as summer concludes, the recent spread of Omicron to large cities may continue to weigh on business activity, both on the manufacturing and on the services sector. And remember, China has just announced its decision to lock down the Chengdu city from 6 p.m. to contain COVID-19. So clearly, China's growth could continue to remain subdued. But on top of that, as we've been highlighting for the last couple of months, and China has been facing a growing property concerns, and that has got economists worried. We've been talking about the Evergrande crisis that emerged more than a year ago, and the failure of Evergrande to pay its mounting debt of $3 billion. The latest news coming out of China's property sector is that the biggest developer, Country Garden's profits plunged by 96%. This is far worse than the company's own prediction of a 70% decline. Country Garden's profits plummeted 96% for the first half of this year to 88 million versus 2 billion a year ago. As I said, far exceeding the prediction, as the property sector has descended into a rapidly severe depression. That's what the company has said. And it said that only the fittest can survive. Now, China's property crisis, as I said, started when the second biggest developer, Evergrande, said that it might not be able to make its debt payments on its $300 billion debt mountain. And at that time, many market watchers believed that companies such as Country Garden, which did not have such a high borrowing, could be insulated. But now, going by the latest numbers that have come out from Country Garden, it's quite clear that's not been the case. As I said earlier, China is facing a growing property crisis, and that's got economists worried. If you remember, earlier this month, in the month of August, around middle of August, Goldman Sachs lowered its China's 2022 GDP forecast to 3%. Nomura as well cut the full-year growth outlook to 2.8% versus 3.3%. So even as India is worried about its Q1 GDP print at 13.5%, missing expectation, look at the estimates for China. And, it's just been bad news, right? COVID-19 and now property crisis.
Oh, absolutely. You know, in fact, speaking of the property crisis, even for the US, right, we have been talking about new home sales going down. Goldman Sachs also has written on the same, and they've said that for the full year, they expected 22% drop in new home sales. So this property issue and the drop in sales is something that we are seeing play out in several parts of the world. Of course, China, perhaps the worst hit right now. But by the way, Ashok Leyland's August sales are flashing on your screen. Total sales up 51% right now for the year-over-year number. This is at 14,121. That is for Ashok Leyland. So it's looking quite good. The stock is holding up. It's actually moving higher right now, around 4% in the green. So we're going to wrap up on the show right now. But you guys stay tuned. Halftime report comes up next.